An international station for an international city. This is Radio 3. Money Talk.
Good morning, it's 8:03 in Hong Kong. Welcome to a new week of Money Talk on Radio 3 on Monday the 18th of October. This is Peter Lewis back with the latest business headlines. The US has said that it will reopen its borders to fully vaccinated travellers from 33 countries on the 8th of November. China, India and the UK are included among the nations whose citizens can enter the US, and China's Sinovac and Sinopharm vaccines will be on the approved list of jabs. China's central bank has broken its silence on the debt crisis at Evergrande, arguing that risks to the financial system stemming from the developer's struggle to survive are controllable. The impact of the energy crunch and sharp slowdown in the property sector on the overall economy will be revealed this morning when China's National Bureau of Statistics releases third quarter GDP data, along with September's industrial production, retail sales and fixed assets investment numbers.
You're listening to Money Talk on RTHK Radio 3.
RTHK Radio 3.
It's 8:24 on the phone from Shanghai's independent economist Andy Sher. Morning, Andy.
Good morning, Peter.
So we have a slew of important data coming out this morning from China's National Bureau of Statistics. Let's start off with the GDP number. The Chinese economy expanded 12.7% in the first half of the year, but quarter-on-quarter expansion was just 0.4% over the first 3 months, 1.3% in the second quarter. I've seen some economists forecasting that quarter-on-quarter GDP could become zero or maybe even negative because of all the problems from the energy crisis and the property sector. What's your thoughts?
Yeah, but it is possible. Basically, the blackouts really dented the industrial growth. And year-on-year comparison, talking about a 5%. So it's compared to the previous quarter, probably not much growth. So as industry is half of the economy, so I think that the Q3 is pretty subdued.
And do you think this is going to continue into the next quarter as well? Because there's no sign of the energy crisis or the problems affecting the property sector being resolved at the moment.
Yeah, it's really about how high the coal price China is willing to accept. We have a gap of a significant gap of over 8% of gap in terms of a coal supply. It's about 200 million tons. China is importing a lot more, but the global trading coal is fairly thin. It's about 1.5 billion tons, and the supply capacity cannot go up in the short term. So if China goes out to bid for more coal, obviously the coal price will rise a lot more. It's tripled already. If China buys the coal and other countries cannot, so countries like India will have blackouts. So it's really we're talking about zero-sum game in the short term.
So what can Beijing do? Because so far President Xi Jinping's administration hasn't really done a lot, has it, to relieve the pressures sort of building from these blackouts. It said it will allow power companies to increase prices by sort of 20%, but it's probably not going to be enough, is it?
Yeah, well, the coal price is tripled, right? So we're talking about a huge price rise if you want the power plants to stay profitable. So I think the issue is really there's not much we can do in the short term. You cannot increase production right away. It takes time for coal mines to open up. And in the last couple of years, every country has been shutting down coal mines, and partly because of coal demand was declining for 2 years, about 7%, and because of the climate considerations, a lot of countries were really shutting down and not opening coal mines. So the capacity has been going one way. Now this year, we suddenly have this a huge bounce in demand, and China's exports are rising at 30%. And China's electricity is largely driven by coal. So we have this huge switch to coal right away now. So I think that it's no matter how China handles that, it's going to be difficult. You cannot increase the price of coal. Now it's close to $200 per ton. If you double that to $400, nobody is going to make money. So I think that some kind of quantitative restriction like blackouts will stay with us through the winter.
So this is obviously going to have an effect on the industrial production numbers that we're going to see this morning. The other problem, of course, is the crisis in the property sector. Presumably, that's going to have a big impact also on the economic data and particularly the fixed asset investments in September.
Yeah, it will have, but I think at the short term, it's limited because that the government will ensure that property production will continue, like Evergrande projects probably will be transferred to other companies. So it's really about a new starts. We see that the land sales in small cities are slowing down. So most of the production is in small cities. So I think that because the property cycle is 3 or 4 years, so the impact is really gradual over time.
The PBOC was saying last week and also repeating over the weekend that the Evergrande problems are that they're a one-off and that the risks from the sector are controllable and unlikely to spread. Do you agree with that?
Well, I think the central bank wants to contain, want to limit the contagion. The contagion inside China, the government can control because the government controls the financial system. But there's an offshore component. Chinese foreign debt at the end of last year was 2.4 trillion US dollars, and about half related to property sector. So the offshore financing is drying up. The rollovers are becoming very difficult. So you have this contagion via offshore component. So then you have these more property developers will have a liquidity problem down in the coming months. So I think that's what concerns the government. So the government wants to assure the offshore market that it's not the whole sector. But I think that it's probably the whole sector is at a tipping point. China's property cycle has been way overextended over the last 15 years or so. It's really rolling over. The government has decided the property, if they let it go, the property market will bring down the country. So maybe it's not too late to stop it now. So I think this is where we are.
Okay, well, that's a very dire warning for us, but let's see how that develops. Thank you very much, Andy. That's independent economist Andy Shi.
You're listening to Money Talk on RTHK Radio 3.